Hey everyone, welcome back to the Your Money Your Life podcast. We're on episode 265 of the podcast. Do me a favor, wherever you're listening, go and like, subscribe, five-star rate review, and leave comments. Make sure you hit the notification bell so you know every time we are on, going live, and releasing a new episode. This is going to be action-packed with a lot to discuss. First and foremost, let's get this out of our way. Let's go to the markets first and foremost. We'll talk about the markets and what's been occurring in the markets. You see the chart here. Let's go over the chart first before we talk about why it's moving. Last 5 days, there's been a turn a little bit in the market, actually. If you look at it, down 2% the last 5 days, been a big move. We'll talk about kind of what's been occurring and why that is. Year to date, we're still a little bit up, almost 1%. We're positive. But again, this is more normalized growth versus people seeing crazy outlandish growth. I think this year is going to be a little bit more choppy. But I do think first quarter, we're still seeing growth and performance in the market, but that may change because there's some new news that has come out. Let's look at a little bit of what is popping up, recently. So first and foremost, we had big earnings. There was NVIDIA who released earnings. They said that chip, they had fourth quarter estimates that were exceeded with this last print in their last quarter on the top and bottom lines. That means revenue and, um, excuse me, let's get this out of our way. No one likes commercials, by revenue and guidance. So, they were they beat expectations. So they did rise a little bit after the bell. So if you look at it, let's dive into the numbers. NVIDIA's 78% year over year increase remains impressive given its scale. That's one analyst said they had a robust performance. So there is something weighing on sentiment, which is the jump in jobless claims. So we did have a jump in jobless claims. This is adding to concerns of economic softening. So if you think about jobless claims, there's people that are filing for unemployment insurance or any of those different things. Um, and it's going to be recorded, and it's a good gauge on what's going on with economic activity, with spend, and that is starting to show a little bit of softening. The softening that we thought we'd see in the market a year or two ago is potentially starting to happen, especially with some different things that we may discuss here in a little bit. So that's one big thing that we could look into. Consumers just don't feel as confident. I think that's the best way to put it. There's softness in consumer confidence reading, disappointing retail sales. Consumers don't seem as confident as we have the last couple of years. And that could lead to a difference in what happens in certain areas of the market. So that's the big thing. You also saw tariffs coming. You saw different items with a gold card. We'll talk about those things and how that could affect the markets as well. So those are big things. Let's go back to the chart. And again, that's why you're seeing that reading that we're having right now as we sit pre-market. Let's get an accurate read for the Thursday listeners. The futures were up, and then we got news of tariffs potentially being enacted on March 4th, and futures turned down from their highs earlier, and so that's the futures pricing when before the market opens at 9:30. So they were up a lot more, uh, in earlier in the day, and they came down a bit, and they're kind of creeping back up at the as far as the futures go. So the Dow futures is actually in the red, while the Nasdaq and S&P pulled back from their highs in the early trading. So that's a big thing to watch. We'll keep an eye on that. Let's go into current news and events. Squid Games, that topped Netflix shows. So Netflix released its biannual rundown. I'm actually going to look at this because I'm super curious. And we had Squid Games as the top content. Let's look at this. So of its top content from the second half of 2024. They reported 94 billion total hours of viewing, a 5% increase over last year. The second season of Squid Games was the streamer's most watched TV show for the entire 6 month period, despite premiering at the tail end of the year, racking up 619 million viewing hours in just 6 days. Wow, that's pretty impressive. The Union and Rebel Ridge were also top shows. So the only one of those top shows I saw was Squid Games, which second season I didn't think was that great. Okay, let's talk about this. What's with shows having a really hit season and then waiting 4 or 5 years to release the next one? The first Squid Games was 2021, wasn't it? Like, how am I supposed to remember, feel tied in, care anymore? You can't do a show 5 years later and expect us to give a damn. It was okay. It wasn't great. It got better towards the end, but it wasn't that great to begin with. That's the same thing with Severance. Watching the second season of that one was at least a little bit closer to the first season, but still, what are they doing? It's becoming Westworld. No one can remember what's going on. No one knows what's going on. They're losing the plot in these shows. So let's look at the engagement report from Netflix. They said, let's look at the highlights. Members watched 94 billion hours of Netflix in the second half of the year. Squid Games was the top show. Films, Dr. Seuss, Trolls Band. Nearly a third of all viewing came from non-English shows and films. Okay, so international is growing. Carry On was a good movie. We watched that. Oh, The Union. That's with. Oh, I didn't even know that was on. I actually need to watch that. Oh, Rebel Ridge. I did see that. That was a good movie. That was a good movie. And let's see. Most watched shows. The Perfect Couple. That was good. Monsters. That was good. Okay. Paul versus Tyson was a good show, they said. Interesting. This is a good report. I like the data that we could get from them. So those the YouTubers, you get to see the data on your screen. Let's look at this again. Prayers to the LA fires, people and family that are affected. It also hit Sweetgreen. That's interesting. So Sweetgreen, of course, it's a popular retail fast casual salad chain. They had their latest earnings and it was a mixed bag. They said that revenue expectations were up, the sales were up 5.1%, but the same sales stores growth and revenue guidance fell short of analyst estimates. CFO Mitch Reback pointed to extreme weather and the fires in Los Angeles, which represents 15% of the company revenue. So that's really, really fortunate, of course, for everyone involved. But now it's trickling down to the companies in that area. They said that which 50% of the company revenue was factored, was lowered, had a lowered sales come in because of the fires. So they said that they're going to open up 40 new stores this year, half of which will feature an automated kitchen, and this is to cut labor costs. So that's interesting. 40 new stores, half of them are going to feature an automated kitchen to cut labor costs. That's a company coming out, a fast casual chain coming out and saying, we are automating ASAP and we're doing it right away. And so if you're someone that's, in those lines of work, you have to just understand what could be potentially coming down the line. Wow, that's quite interesting. We'll have to keep an eye on Sweetgreen and what they're doing. Growth is there, but the profitability isn't there for them. I thought this was interesting. Instagram is mulling a separate Reels app. So Meta's Instagram is ramping up efforts to challenge TikTok, which whatever happened to the whole TikTok thing? They didn't get banned, but then they were taken off iPhone stores and they were restored on iPhone stores. And is anyone still talking about it? What's going to happen? Are they still, it's just fine now? Is it good? I guess so. But Meta is looking to challenge TikTok and they're considering a standalone app for Reels. It's interesting. This is reported by The Information. The chief, Adam, at Instagram, said that they are looking at something called Project Ray, aimed at fine-tuning video recommendations. Meanwhile, um, Meta had to apologize Thursday for some users reporting graphic and violent content recommendations on their Reels page. Interesting. I think this is a good idea. I think the separate Reels app might be a good idea. I like, I think Reels are good. And everyone knows TikTok just kind of blew up that whole short form or longer form video space. And algorithm, Reels makes sense. I think it could be done better on a separate app because with Instagram, it seems too convoluted. It's like people that still want to just post pictures, but there's still people that want to only post Reels. It should be separated. I actually kind of agree with that. And we'll see if they do that. I think that'll be good for them to explore. So we talked about the economy earlier. Let's look at what fields are being hit the most with unemployment. The rate still has been fairly low for unemployment. We're going to get new data now as things are happening. And economists are worried that job growth is confined to some narrow industries. So let's look at those industries. The recent top line growth in on hiring has disproportionately driven by catch-up hiring in fields like healthcare and hospitality. So that's interesting. Healthcare and hospitality. Let's look at the trends over the next 12 to 6 months, 12 to 18 months. This is by someone who's looking at these. The hiring slowdown until late 2025, economic uncertainty, high interest rates, sectoral job growth disparities. Healthcare and government jobs will grow. I don't know about that. While personal finance, services, finance, and technology tech may continue to struggle, this person may be off base because we've seen a difference in that with government jobs actually slowing down. So that's actually interesting. But it does seem to be narrowed. So what they're pretty much saying is it's narrowed, growth is narrowed to certain sectors right now. And that I do agree with. Job growth is going to be narrowed to certain sectors and certain areas, whereas a broad general growth that we saw in 2022, like is gone, right? And so that's a very, very clear to me and should be to everyone. NVIDIA, DeepSeek, this is how they crush the threat. So remember DeepSeek, we talked about it a few weeks ago. It was a model of concern for NVIDIA, and they were looking at, you know, where's less computing power needed to power these AI models. But Jensen Huang noted that the AI reasoning models, including some popularized by DeepSeek, require 100 times more compute power than its predecessors. So that's good for them. They need chips. People need chips. They need computing power. The new models are doing so much reasoning, doing so much advanced reasoning, doing so much request that they need 100 times more compute power. The company NVIDIA is also expected to develop inference chips that help companies operate rather than create new AI models. So that's interesting. NVIDIA is winning in this trek to kind of run and have a leg in this AI space. They're doing a great job. We're going to go back to the chart and look at NVIDIA's stock price. 6 months, it's done well. Year to date, not as well. Remember, we saw the DeepSeek crash that kind of hit them in late January. And they pulled back, pulled up from that a little bit, actually. Um, and pre-market, they're up. The market must have liked their earnings or what was said. The guidance was better. They said that they have a lot of demand, and that's the thing. They're winning this race because they have so much demand. They've created what the market wants, and they're winning. If you look at the stock price, it's reflecting someone that's winning. And so that's what they're saying in that spiel there. Let's look at the QQQ, which is a good track of the Nasdaq stock market. Year to date, about flat. 6 months, it's up considerably, about 8%. Over a year period, we got about 17%. So good to just track and know where these things are, and to be in that arena, understanding what's going on with those markets. Let's take a look at other news. Tesla, they had earnings. Um, and let's look at what they're saying since their earnings came out. So their shares fell when they had a little bit of information come out about how they were doing. It was following the news that sales were down an eye-watering 45% in Europe. So sales down 45% in Europe. That is not great for them. So they've been declining. People are curious on why. I guess if you look at, you know, price to earnings ratio for Tesla, it's obviously high, but what is the going on in Europe that they would be down 45%? That's a really considerable drop. Are people just not buying the Tesla products over there anymore? That's a really considerable drop. And that's why the stock price kind of took a tumble there. Um, so we'll have to watch that. I do know there's some government things going on with EVs that are going to make it less favorable for EVs. The restrictions or the commands to have a certain percentage of vehicles be electric vehicles is supposed to be stripped away. So that's going to be a thing that affects companies like Tesla and other electric vehicle makers as well. That's going to be interesting to watch. Warren Buffett, he came out killing it as always. Stock is up a lot since inception. That's pretty interesting. They did the math on how Berkshire Hathaway Class A stock is up since September of 1976. It's 100 and over 100 million percent. or 1 million%, excuse me. 1 million%. That's impressive. And he is hoarding cash and letting go of some of his positions, but he's hoarding cash, ready for a big move, and he's all just flowing with cash. Is Warren Buffett in Berkshire? There wasn't much else. We just got through a lot of current events. I saw something on Apple, but wasn't that interesting. Was there anything else? I don't think so. I don't think so. The auto industry is getting volatile after years of relative calm. Okay, I'm actually interested in this. So, after years of a post-recession stability in the auto industry, marked by broad shifts in product mix, like gradual pivot towards electric vehicles, we were just talking about that. The past several weeks have comparatively been absolute chaos. They're saying that just in the past few weeks, auto tariffs in the neighborhood of 25% coming as soon as April 2nd were floated by the president. Merger negotiations between Nissan and Honda that would have created one of the largest automakers in the world collapsed, and hydrogen-powered vehicle company once worth more than Ford filed for bankruptcy. Rivian. Rivian was once more than Ford. That's crazy. That just tells us the times we are in. Rivian, a company that I don't think has even sold much of their cars. Obviously, they filed for bankruptcy and they used to be worth more than Ford. That's just crazy. And that was one of the very big day trading stocks. It's just going to go up stocks for people. That's crazy to think about. That's crazy. Let's jump into personal finance questions and see what we have today. I think there's a couple good ones that I noticed. So, what percent of Americans bought necessities using buy now, pay later in the last year? So, bought necessities using buy now, pay later in the last year. I'm gonna say 30%. Is that a good number? Oh, 8%. Necessities is actually the key word, not wants. I think wants would be higher, but necessities, 8%. And that's not bad. Okay. 8%. And it breaks it down by all Americans. You'll see the millennials have done it the more. That's at 28 to 43 age range. I love seeing the different generation age ranges. So we got Gen Z 18 to 27, baby boomers 60 to 78, Gen X 44 to 59. Who's the most annoying of this? People are really getting at boomers online, anyways. Do you think the boomers are the most annoying or millennials? I stand in the millennials. Who would you give that title to? And not even most annoying, just the most insufferable, I would say. I don't have an answer, but let me know if you do. But that's interesting that it was 8%. I would have guessed higher, but okay. Let's look at our other question. What are the top three ways consumers plan to spend their tax refund? And for those that you obviously know, the tax time is coming. We've had a lot of people at the New Street Advisors Group side save money in their Roth, save money in traditional, save money in their SEP, have that money stocked away and invested for retirement. And so make sure you do that if that's something you plan to do for 2024, being the last day for that is 4/15 of 2025. For you to max out those contributions, make sure you get that done. We've had so many people do that. What are the top three ways consumers plan to spend their tax refund? Let's look at it. Oh, let's guess first before we look at it. Paying down debt, saving, travel, vacation, I would say that. Savings, got that. Pay down debt, oh, got that. Everyday expenses. Okay, okay. I'm happy to hear that. Everyday expenses. That's the last portion. The other ones were major purchase, home improvement, splurge purchase, vacation did pop up there. Okay, I like that. This is good to see. People are stacking up. That's good. That's good. Um, for us, same as always, we have so much going on in New Shoot Sports and New Shoot Advisors Group. Make sure you stay tapped in, share this. We have workshops coming up. We have NFL Pro Days coming up, Combine Pro Days, all these things that we're getting prepared for. Make sure you stay locked in and share with your family and friends. We will talk next week.